Hey everybody, it's Hussein Kabani, your favorite broker. And as you guys all know, who I have here with me right now, we got Varan from iConnect Mortgages, and it's the beginning of 2024. So what we are going to be talking about today, with all of Varan's expertise and predicting abilities, is where the rates are going to be all year long.
I think the rates are going to be paused till about April.
Okay.
And the Bank of Canada may probably start the rate cut by April 2024 and continue till 2025.
Yeah.
I think we are going to see a significant difference in end of 2024 to 2025.
Yeah, a big difference in interest.
Not in the first half of 2024.
Not that you don't think it's going to be the first half. But even like just say like for January right now, the first interest rate announcement from the Bank of Canada has already happened. And they basically held the rate. Right? So where are we at? 5%?
Yep.
Yeah, so we're at 5%. But there's been some mixed talk, right? Like I've heard like some people say it's going to come in March. We're hearing also April. So we're actually not sure when it's going to happen.
And I also read another article. They think it may be pushed back to June.
Yeah.
Keep in mind, the inflation for December was higher than what they were predicted.
Right.
So with all these things going on, I don't think so much. Probably April into June.
Yeah, April into June. Do you think, because like the inflation number obviously has a impact on what the Bank of Canada is going to do, but that inflation number from December is probably a bit of Christmas shopping, people traveling around, doing things and whatnot. Do you think that in January, if the inflation number comes lower, that might move them forward to actually lower the rate sooner than they were expecting?
I think when they calculate the inflation number, predicted the inflation number for December, they already calculated the Christmas shopping. Okay. I think what was the biggest factor was the fuel prices.
Still fuel.
The fuel prices was high. And also keep in mind, the shelter cost has also gone up.
Yeah. And I wonder why that is. I think it's because of interest rate.
Most of the mortgages coming up for renewal as well, right? And the rents has gone up. So we are literally double dipping this. So a lot of analysts take the shelter cost out.
Because that metric almost doesn't make sense.
It doesn't make sense. You're adding more fuel to the inflation already, right? So that's one of the things they pointed out in today's announcement as well. One of the reasons for the high inflation rate is the shelter cost.
The shelter cost, yeah. So shelter, fuel, if they factored in Christmas spending already. So, but do you think that if now in January, because people typically spend less money in January, is that, do you think that's correct?
Yeah. We just went through a Blue Monday, right?
Exactly, yeah. So I guess maybe they factored in for that, but you think in January or February, if it's lowered, they will start to decrease the rate, or you think that they're going to hold?
I think the Bank of Canada predicting June. Yeah. I think, in my opinion, I think the April looks more feasible.
So
or
Bank
more
of Canada
sensible.
saying June. We're kind of thinking more like April.
April.
Okay. I guess the other thing that comes up too is that if they lower the interest rates too quickly, we will probably start to see more of a buyer frenzy, because we're basically like 3/4 of the way through January right now.
Yeah.
And what I have been noting right now is that I still do my inventory count almost every single day. And over the past few days, I've seen the inventory actually overall in the GTA come down a little bit.
What
not
is it
significantly.
Now? What is it right now?
It was like 11,600 listings available for sale. And it's not really growing at all. And in fact, I think at the beginning of the year, we were probably closer to 11,700 and change. So we've actually come down a bunch of listings, not anything substantial, but it is kind of coming down instead of going up. And what we're also seeing, and you're already aware of, is that we're seeing more houses go into multiple offers at this point.
Exactly. So a lot of my pre-approved clients, they're missing out on the offer dates. It reminds me what happened a couple of years back.
Yeah. So if we're into multiple offers this early on, because the inventory is kind of being stagnant, I think that would be a hesitation for the Bank of Canada. I would hope that would be a hesitation for Bank of Canada to lower the interest rates prematurely.
Yeah, they don't want to fuel up the house prices again.
Do you think they're smart enough to do that, or
I think they have a different. They're also not seeing any GDP growth either.
Yeah.
So a lot of
they're going to have to get it from somewhere.
They had to get it from somewhere, but to the point, like what's happening it's a little insane. Like I didn't predict this to be happen early January. I thought we we're going to kind of run into this like a March, April timeframe. But I thought it's just Durham region. I have a client who's looking to put offers in Milton. They're running into the same problem as well, especially the entry-level homes between 900 to 1.1 is insanely busy.
Yeah, I agree. I thought maybe we might see this towards the end of February going into March, because typically I see like our spring market. People think spring market is like April, May kind of thing or whatever else like that, but you're kind of already into the full swing of spring market at that point. Typically I see the spring market start to pick up end of February going into March. So I thought maybe that's what we're going to see.
That's exactly what I thought as well. Yeah.
I thought that's when we were going to start to see multiple offers for sure. I knew were going to be coming,
But not this early.
but not this early. So that also kind of raises some concerns for me as well, as saying like, hey, what happens in a situation where inventory doesn't actually increase that much, right? If our inventory doesn't increase,
we run into that same problem a few years back.
And if our inventory continues to decrease, and we're already seeing this pent-up buyer demand coming to market right now, it's just going to drive up the house prices again.
But I have a question for you.
Yeah.
So what happened to the inventory that we had about 15, 16, like almost 15, 16,000 few months back? Like, you think those properties have been sold or they came out of the market? You think they may re-enter in March, so they may balance the market out?
Yeah.
What's your thoughts on that?
Yeah, like I think so. So a bunch of the properties did end up selling, even though that, like say in the third and fourth quarter, it wasn't overly active. What I noticed is that kind of in the December timeframe, end of November into the December timeframe, we saw appointments and listings kind of pick up a lot more traction. So what we're experiencing right now is not like it was Jan 1, it started to happen. It was kind of end of November, going into December. Properties that were sitting on the market in December that were even on the market for like 60 or 70 days, those are the properties that started to sell. So a bunch of the properties did sell. And naturally, a bunch of the properties did expire or come off of the market. They had their time on the market. And then everyone has this idea that, hey, we're going to list in the spring market because the spring market's always better. So we do get a bunch of those people coming off of the market, and we'll probably see them re-enter at the same time.
So do you think that may kind of balance the market?
I hope so. Like, I think that we'll probably see people putting on houses onto the market for a bunch of different reasons. One of them is going to be the people that didn't have success selling last year. They're probably going to come back to the market at this point right now. The other thing also is that like people are going to start to get the renewals. I know somebody that basically had a 1.5% rate and they just renewed again at like 6%. Yep. And even me personally, like, this deal, like yesterday, I just renewed mine. I had a 1-year fix with RBC. I think I was at like 5.5, 5.6 or whatever. And I went on to a 5-year variable at like 6.74 or something like that, which cost me on $640,000, cost me an extra $560. So and imagine somebody that has like double that mortgage, $1.2 million mortgage or something like that. Are they going to be able to swallow that? And that was only around a 1% increase that I experienced. You know what I mean?
And these are like almost 300-400% increase from going from a 2s to 4s and 5s.
So even if we kind of use that same example of like around that 640,000, going up 1% cost me like, $560. Imagine you go from, that 1.5 or 2% into that like 5.5. I think the posted or the rate that they were offering me for like a 3-year or a 5-year was like 5.34
or posted
5.5, something like that.
So the fixed terms has come down because the bond yields were down and they started going back again. But I think it may come back again after the announcement from the Bank of Canada. There's no rate hike. But 3-year terms are about 5.3, 5.4.
Yeah. Right okay. Now. So, but even if somebody had a mortgage at like 2% or whatever, and if they're going to go up to that rate, if they had like a $300,000 or $600,000 mortgage, they'll probably be looking north of $1,800 a month in additional costs at this point right now.
And I also seeing like these mortgages that come up for renewal, so they are used to the very low rates.
Yeah.
And if you look at it, the 5-year terms are lower than a short-term product.
Yeah.
So they're renewing the mortgage into the 5-year term because that's the lowest rate compared to the variable or a 3-year term. I'm just scared if they end up in selling the property, their prepayment charges are going to be insane.
Yeah, it wouldn't make sense.
It's going to be huge. So they're just looking at the lowest payment right now rather than looking at their long-term goals.
Yeah. And you know what? Like, I mean, we've said stuff about rates before, obviously, in the past, and nobody has a crystal ball to actually be able to say, hey, where is it actually going? But even yesterday, I had to make a decision on the spot because, like, I was stalling, to be honest. Like, I was in an open for a little while. I was just trying to figure out what I wanted to do. But I can't stay in an open because it's very expensive at 9.85%. I was even debating it myself. Like you said, like the 5-year fix or the 3-year fix looked a lot better. But you know what? Like, I think like it was like 5.4 or 5.5, whatever. That's what they were offering me.
But you went on a high rate.
But I went like 6.74% on a variable rate because I think that the first drop is going to be a quarter and then another quarter or whatever else like that. I think I'll be at that point very soon. I could be wrong. We were definitely wrong before. So we could be wrong, but I think that I'm probably in a better situation. But again, you mentioned a very important thing. Like I was going to do a separate video about this, but I'm going to blurt it out here right now. Okay?
Yeah.
And I know other people are going to be in a similar type of situation. The rental property I have is the mortgage I renewed on right now. Okay. Yeah. So basically what's been happening is that the payment that I've had it on, me, myself, every month I've been feeding that property $1,350 every month.
Yeah.
I'm paying for somebody to live there, $1,350. I have an awesome tenant. So I'm happy to do it, you know what I mean, kind of thing or whatever. And I know I'm building up a little bit in the background, not as much, but I am building up a little bit in the background. But now that my payment, I have to put out of my pocket like over $1,900.
Almost $2,000.
It starts to change my mind about like, hey, do I need to carry this property? Is it really worth for me to spend $2,000 a month on keeping this property for someone else to live in?
And also the appreciation is not there as it used to be.
Yeah. So I think that's a tough call. And so when we talk about product coming to market, like that's a real example that I never thought that this product was going to come to market yesterday.
Anytime soon.
Yeah. But, starting today, my wheels are spinning and saying, should I be keeping this product?
So if a lot of consumers or a lot of owners like that who's coming into the market, I think the first people going to come out of the market are the investors.
Yeah, and you've said this before as well, so it makes sense. Like, so you see, like I think that there's a lot of opportunities for properties to come to market. One is going to be the people that are going to re-enter that didn't have success selling. There's going to be people like us that are holding investment properties that might just say, hey, you know what, I don't think I need to keep this property anymore. So that could be another person. And the people obviously that are renewing right now as well, right? Like people that are renewing right now are going to be in for a big sticker shock. And it just, like in some of my examples where people have bought properties and I've told them basically don't go that close to your margin or whatever, and they really were, and they were still looking for exceptions when the rates were 1.5, 2% or whatever else like that. If you were looking for an exception at that point,
it is under affordability right now.
Yeah, and if you're going to renew at 5.5 or 6%, like
it's an affordability issue.
You can't afford it. Like that's the thing. And how long are you going to go? Remember, we've talked about this. Social stigma where people continue to try to hold something so they look cool, they don't look like they're going down, or they have this, idea that they look like failures if they sell this type of a property.
And to the point, I even got my annual mortgage statement from one of the lenders I have mortgages with. I add them up. It's $200,000 in interest.
Yeah. So we were talking about this before we started filming, and the thing is that we had a different idea. Like we're not any predictors of the market. I would still like to say we're experts and specialists in the market, but the thing is we're not predictors of the market, right? So we can only move with what information that we have. And like we talked about, as time went on, like that year went on, we had a little bit of a different information. You know what I mean? And based on the information we collected over the past year, I think we're maybe coming to a conclusion that certain pieces we're not willing to hold on to them because it doesn't benefit us anymore.
And also, what you brought up earlier as well is a lifestyle change.
Yeah.
You want to really work on the appreciation, or you really want to simplify your lifestyle?
You know what, dude? I'm glad you brought that up again, too. Because when I was 20 years old or 30 years old, I think my objectives, my goals were different. Huh?
You're still 30?
I just crossed that border, man. But thank you. But yeah, being 40 years old right now, I think my priorities are a little bit different.
Change.
You know what I mean? Like we've been hustling I remember delivering newspapers like a crazy bastard when I was like 8 years old. You know what I mean? Like there's been this progression, and now we're not after the same thing. So yeah, definitely lifestyle change. Do I need to carry these properties anymore, or do I want to? And even this morning I was thinking, dude, I got what I wanted to get out of it. You know what I mean? So why am I going to continue to do this thing?
Yep. No, I agree. I think a lot of people are in the kind of similar mindset as well. And so only thing I'm just concerned, what's going to happen to the inventory in March, April, when all these properties come into the market? Do we still have the buyer's demand?
Yeah, I mean, that's still going to be yet to remain, to be seen. I think that the buyer demand will be there because...
we might get into a rate cut as well.
Yeah, because we're going to get into a rate cut. And from my experience anyways, the thing is that typically the market doesn't pick up this much at this time, right? More people kind of wait until kind of end of Feb into March to start actioning these things, even purchasers. So the thing is that I think we're seeing a very small part of what is going to be onto the market right now.
Yeah, we're just seeing the tip of it.
Yeah, and I think that I could be wrong, but if anything, we'll just see a stability right now. So the buyers that come on, the inventory that comes on is just going to get absorbed. So I don't think we're going to change from the position that we're in. I mean, that's
So at least we'll be continue to be in a balanced market.
that would be the best case situation, right?
Yeah.
Like even if our inventory goes from like 11.6 or 11.7 to 15, 16,000, but our sales will increase at the same time to absorb that inventory that's coming on,
Yeah.
right? So as long as that happens, I think that's a good situation. The problem we could face is that people that were sitting on the sideline to actually purchase because they want to buy at the lowest time in the market or whatever, they kind of missed that boat already because that would have been like September, October, and a bit of November because December it started to climb again.
Yeah.
But these people are going to be trying to get onto the market because they have the information that the fixed rates have coming down. They know Bank of Canada is going to be dropping the rates and stuff like that. So we are going to see a pickup of buyers.
Yeah, 100%.
And like we were talking about, it's about lifestyle, right? Like we get carried away about trying to make money and investments and getting rich and all these other things, but we have to also remember that we have a lifestyle that we want to try to maintain, right? So again, like I want to caution people of not to do stuff outside of their lifestyle. And if you have a lot of stuff out there already, maybe you want to simplify some of it as well.
Let me ask you this. What's your thoughts on the pre-sale in new homes in Pickering?
That's a good point. Yeah, that's a good point. I always have the same theory about pre-construction sales is this. If you want to buy pre-construction sales, I would say look around the market and look at the sold prices. You don't have to contact the realtor anymore if you want to see sold prices. You just go to House Sigma, right?
Yeah.
Like there's a lot of sources.
Some realtors look at House Sigma anyways.
Yeah. Okay, so you just go to House Sigma and you could get an idea of what these houses are already selling for. I would do that comparison. If you are buying that pre-construction property that is at that same number or higher, I would consider to go to the resale market.
And buy something now so you're not hedging on the future.
Because there's been more than one time. I want to say that in my call it short career or whatever, I've seen it 3 times happen already. Do you know what I mean? Where people have committed to paying something, they think it's going to go up, and it doesn't go up by the time the closing comes up.
2023.
Yeah, and then once prior to that, before I was actually selling real estate as well. But like I was involved in the market.
I'm seeing a lot of challenges right now in the pre-cons.
Yeah.
I have 2 clients. One of them actually walked away from the deal, lost $400,000.
Wow.
Appraisal came in $400,000 less, and they are losing the deposit and potentially get sued.
Yeah.
And this is all in Durham region.
Wow. Yeah. And I don't think the builders are going to let off. And you know what? Like, because you brought it up, and I've put this out there before too, and I want to caution people, don't go back to the builder. You're standing in line right now, freezing cold, fighting for allocation for these units. Don't go back to the builder when you find out that the price has dropped $100,000, $200,000 before closing and you can't close on it. No. It's not the builder's fault. You lined up and you willingly gave them your money. No one forced you.
No one enforced you to come and stand at minus 30.
Yeah. Or just think about it this way. If you do make that money, think about saying like, hey, I bought it for 1.2 and it's worth 1.5. Are you willing to split 50-50 with the builder?
That's the builder's argument has been, right?
Yeah, like so like I don't know.
Or don't burn the house down.
Yeah, don't burn it down. Yeah, exactly. Well, it's just going to cause a delay, right? But yeah, at the end of the day, I think pre-con, you have to be careful. I think there are some good pre-con projects. So like, like I bought into Pickering City Center, and I think that was an okay investment because I have a different vision of what I'm going to do with that unit, right? It's not like I'm speculating and saying this is going to go up tremendous amount of money. I think I have an alternative purpose of why I wanted that unit and why I bought it.
I think pre-con is still good for people who is working towards saving the down payment, or they just want to be end users. And like I was talking to someone, they brought a valid point. Buyers are looking into appreciation before they even think, how can I close a mortgage?
Exactly. Yeah, they're looking at the money, but
that's
the wrong
value.
purpose. Yeah, but again,
it's like buying a stock.
Yeah. But you know what, like about pre-con too, right? Like there are some projects out there that I was introduced to that are pretty cool for people that want to actually enter the market. Like there's one project that basically you got to put your 5% down payment on it. Yeah. And basically the next 5%, you got, I don't know, 2 years or 3 years to pay like monthly installments, $1,000 or whatever it is until you get to your other 5% of it. And guess what? On closing, basically there's an incentive program that they're basically going to top you up to like 20%. So you're basically going to put in 5% up front, 5% over the course of 2 to 3 years in payments, right? And then you're going to get 10%, so you're going to meet your 20% down payment requirement as well. And these things are going to be ready in, I don't know, 4 years, 5 years, something like that.
It depends on what is the end use of the property. Yeah. That's what it comes down to.
And then it depends on the end use, but then also if you have like a little bit of money and you're wondering where to kind of put it, if you want to invest the money, I'm not saying it's the right thing to do, but if you are thinking it's the right thing to invest your money, if you have like something like $30,000 or $40,000, it might be a good idea to kind of lock it up into a project like the one I mentioned, or like there's some other stuff in Calgary. I haven't been a huge fan of Calgary.
That's what I was going to ask you.
But like Calgary is something that someone actually sat me down and kind of explained why it's going, because I had a negative approach on it. I'll be honest about it. I kind of thought, what's going to happen here?
Yeah.
It's just a big boom, a big bubble over here. But it's as somebody kind of explains certain things that are happening, businesses that are going there, the corporate tax rates, and the benefits of like people investing in there, and they don't have to deal with the Ontario Tenant Protection Agency in certain situations. It seems like it could be an option.
But you think that's going to be there for long term, or it's just going to change it like what is similar to Ontario? Like I cannot see them have this going because the growth and the immigration Calgary is having.
Yeah, I don't know. See, that's the thing. Like we know that everything is kind of fueled on the employment and the infrastructure, right? Right now, Calgary is putting in apparently there is a lot of employment that's going in. Like Amazon is doing something big there. There's a lot of other tech companies that are looking at going in there. Yeah. They are investing in their infrastructure. It's hard to say if it's going to be a long-term play. But like if every investment has certain risks associated to it, do I think it's going to be okay for the next like 5-ish years of investment? Probably.
Yeah.
What is it going to do in 15 years from now? I have no idea. Nobody knows, right? But the other thing that we have to take into consideration is this. Do you believe that the cost of construction and the cost of land over the next 10 years or 15 years is going to go up?
100%.
So that's the thing. Like you can't
I don't know about the
replace
land,
it.
but at least the construction is going up.
You can't replace it. That's the thing, right? Like even the house that we're sitting in right now, we had a conversation about it before. Is like, if we started building this thing now, like our costs would be way higher than
at least 30% more than what you.
Like I think at least 30% more. So it's like we can't replicate these things.
That's mean the house prices has to go up by 30%.
It has to, man. Otherwise, like even me, if I consider selling it, like why would I sell it for that same amount? It doesn't even make any sense, right? You might as well stay put at that point. Yeah. I mean, I think we covered a lot of different topics, but let's just to kind of get to a conclusion of this podcast. So we're basically talking about interest rates. So we feel like the Bank of Canada is going to do the decrease the interest rates, and
Probably
we feel like
April, June time.
April-ish to June, we'll probably see the first cut. What do you see the first cut being? Quarter. Yeah. And how soon do you think you will see a next cut?
I think it will be a very slow rate cut, and an aggressive rate cut will be coming in 2020, end of 2024, 2025.
So you think towards the end of the year more so?
End of the year mostly, yeah.
Okay. So basically we're kind of thinking, sometime between April, May, June is we'll probably see a first rate cut. Maybe possible to see one kind of July, August-ish kind of thing or something like that.
They're predicting a 2% rate cut by end of 2025.
Until the end. What do you think about 2024? Like we're sitting at 5 right now.
So I think probably probably April we may go up by quarter.
Yeah.
June we may about a quarter, but on the fall market we may probably see like a 0.5% cut.
So you think like roughly no one knows, but like
this
about
is
a
assumption.
percentage.
Like we don't want to get the heat on it.
Nah, but we think like about 1%. We're probably seeing.
I would say probably 1% by next April.
Okay.
Like I think that's very realistic and not
it's
overly
realistic.
being positive.
Yeah, depending on what ends up happening. But you don't think that percent will be by the end of the year, right? You don't think
I
Jan
don't think
1,
so.
2025 will be sitting at 4 points?
Could be. In fall, like what's going to happen in the fall. And I think the growth is not there. They still keep talking about the GDP growth and employment numbers, right?
Yeah.
It still is not in the way it should be.
Yeah. So basically, we could probably see it be at 4.25 beginning of next year.
Yeah, that's
maybe
still
4.
It's a big drop though.
It's good. I think in 2026, I heard a report out there, and I forgot where I heard it from, but 2026, they were saying it wouldn't be unheard of to say that the rate would be sitting at 2.25.
You never know.
Yeah. What do you think about it?
If you're going to go to 3% by end of 2025, that is possible.
It is possible in 2026 that you'd be sitting at 2.25 or 2.
If inflation comes under control and everything is flowing in the way it should be, I think we were like 3 to 4% anyways.
Yeah. So I think that it would, like, I mean, those are the mortgages that we were getting. Do you know what I mean?
And also the government has to look at what's going to happen to these borrowers.
Well, yeah. And I think that's why, like, they are going to start to lower the rates this year. Because, like, what was it? Like 15, 20-ish%? Like 10 to 15, 20% of the major banks, their low rate interest mortgages were going to come up for renewal now. And then in 2025, there was a way bigger chunk that were going to come up,
Put it this way, Hussein, right? So the person who take a 2%, they qualified at 5.25.
Okay.
So if someone is renewing the mortgage at 6%, they exceeded the stress test.
Correct.
So they had to be somewhere around 3.25, 3.5 to pass the stress test. They qualified 3-4 years back.
True. So good point. So even if they bring if you were able to borrow money at like 5.5 points, then technically you should have been able to afford it.
Yeah.
I guess that if you had all of that spare money that you're qualifying on as a buffer, and inflation has taken that buffer away from you, I think that's also a challenge because then that stress test didn't mean anything because you didn't factor in that
That's
the
inflation. So at the time, the groceries were cheaper.
Yeah.
Gas prices were cheaper. The labor was cheaper. Everything was cheaper. And also keep in mind, when we do the GDS and TDS, we don't include the car insurance payment. We don't include the groceries. We don't include the Rogers bill. We don't include the internet.
Yeah.
None of those.
So none of that's accounted for.
Yeah.
So even though you
Daycare.
went through the stress test, inflation has eaten into that for
Yeah.
sure. So just because you pass that 5.25 doesn't mean that you have
You
enough
are
money
set.
left.
Your money left.
And the thing also is that like house prices have gone up so much, inflation has gone up so much, but where has the salaries gone? They've been kind of flat. So
If anything, is more competition for
Yeah.
jobs right now
Yeah.
with the number of immigrations.
like right now, dude, we put out an admin job, and I think we put it out for like 18 to 21 bucks an hour. Okay, we're getting in 3 or 4 days, we got 80 applications. 80, most with bachelor's degrees, some with master's degrees. I kind of found it like, wow,
Overqualified.
yeah, overqualified for the jobs that we're asking and for the pay grade, to be honest.
That's scary.
It is definitely scary. But yeah, I guess from an interest rate perspective, I think we'll see some easing. I think maybe not so much easing for people that have already been locked into like fixed rate, low rate mortgages.
That's why we're advising people not to take a tool, don't take a 5-year term like 2022, 2023, right? Because we know we are going to experience a low interest rate environment in 2024.
Yeah. So that's the bottom line. Like right now, if you're talking to clients, if they're asking for your opinion, you're saying
Variable.
It's
an opportunity cost. Variable payments rates are higher, payments are higher, but it's opportunity cost. What's going to happen? Like for example, like if you're getting a 5.4 on a 3 years, 60 days back it was north of 6.
Yeah.
So it dropped about 1%.
Yeah.
So why don't you take the variable and convert it into a fixed term and take the opportunity cost for at least for 6 to 12 months?
Because that's a good point. I know I want to wrap this up, but you said something that's important too. Like even if you go on that variable right now, you could convert it to a fix. Like so,
Correct.
if you start to see the rates come down, and maybe you sign onto a variable right now for like 6.5% or whatever it is, and then you start to get a rate offering at a fixed rate for 5 points or whatever it is.
You can go
just
back
say,
to
hey,
that.
I just want to go to this right now and be safe.
So you have flexibility.
Yeah. So right now you're saying, hey, like maybe the best shot is to stay variable, and then if you are nervous and you keep your eye on the rates or whatever, and you feel want
Talk to the lender and convert it.
go into a fix afterwards.
Yeah, convert it.
And so basically recommending a variable, keep your eye on the fix if you want that comfort, and then you're thinking like maybe a 0.75
By end of this
decrease
year.
by the end of the
this
year. Yeah, and maybe the first one happening April to June-ish kind of thing.
Correct.
Awesome. So we'll hold you to that.
Yeah.
And
Record it.
well, here we are. All right, man. I appreciate your time.
No problem. Thank you, sir.
Thank you very much. All right, guys, if you guys have any questions, we are going to put up Varan's contact information. So if you guys have any mortgage-related questions, definitely reach out to this guy. He's got the answers for you. Until next time, guys, remember one thing. Get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.